Hello traders, and welcome to another weekly market forecast video. Hopefully everybody is having a great day and a great weekend, of course. So before we start with this weekend's video, we are going to go through our trade results for the year since March that we have started, and those will include only the short-term trade recommendations we have shared to our members. And then we will go quickly through our special end of the year offer before we start the weekly market forecast. So these are our shorter term trade results for the year. So we have reached the 44.37%. Once again, this represents the positive market moves that we have generated. And we'll show you on the charts what we mean. And in pips, if we are measuring in pips, we are almost at 3,500. So these are our results for the year for our members, and these include only shorter term trades and not holding longer term positions, whether you are buying stocks or any other assets. These are separate, and those will be shared only when our members have been recommended to exit the longer term positions. These are just the shorter term. So as you can see, our performance is pretty stable. We have periods of consolidation and then we go to the upside. So this is because of the uniqueness of our approach, methodology, and the way that we recommend how to set up the trades. So this is how it is. And then this was the trade in the pound that we have generated a week prior, and the Swiss yen, it was about this move over here that we were expecting before the market reacted here on NFP yesterday. So those are the two trades. So let's then move to the end of the year offer so you guys know what we are talking about. So this is for the end of the year special offer. So if you are going to join us and you become a member, as you know, the link is in the description. You will come across to this page. You have the option to go with the monthly and then the yearly. You can see that with the yearly, it's a one-off payment and you save up 2 months of the year. We are going to give you an extra month, so you are going to pay for 10 months and you're gonna receive 13 months worth of our subscription. What we cover is pretty much straight to the point. We will be hosting 2 sessions on a weekly basis on Wednesdays and on Saturdays, and also you are going to receive our market reports wherever they are applicable, and plus you are going to receive our trade recommendations that we provided, that you have seen the results on the spreadsheet, and also you are going to be receiving a longer term as well wherever they are applicable, and this is included in this membership. Also, you are going to receive in January our comprehensive educational package, which will be combining all of the knowledge and things that we are showing to our members through the live sessions so far, everything in one place. And also very importantly, we will also teach you how to have certain strategies in terms of risk management, positioning, and this type of things that many of you probably are not aware of until today. So this is a massive offer and a massive value, because when we launch our website in the beginning of the year and we will have this comprehensive analysis package, it will be with a cost of 1,600 euros, and it's not going to be provided for free with a yearly membership. So this is our offer for the few of you that might decide to take it and change your trading journey forever. This is your opportunity before the end of the year to get this special offer by the 31st of December. So for questions, you can email us at support@roiforecast.com and we will get back to you within the day. So let's start now with this weekly market forecast video and see what we are going to expect for the market. So for the dollar index, as we have explained last weekend as well, we were expecting the market to give us a bounce before it turns to the downside once again. And this is exactly what we have started during the week. Then on Friday, we have got a reaction, which now we are going to consolidate in the beginning of the week. And then we would expect the market to give us the next push to the downside. This is what we are expecting from the dollar to do ideally during this week into the next, more downside towards the 104 area. So we are going to have certain news as well during the week, such as the CPI. Perhaps this might be the trigger for the move to the downside. If not, then the dollar might do a double like that before it drops later on. So either of the two cases, we are expecting the dollar to come down to the 104 area during the next week or two. So for the dollar yen, we have got the small bounce to the upside that we expected. Now the market might do one more push to the upside. If it does so, then we might expect again a reaction to the downside to follow. So this is a pair that we do not like to trade at the moment. It can do many things, but it looks like it might give us one more push up, a small one, before a fall. So that is the overall view for the dollar yen for the time being. But once again, this is not something that it's of our interest for trading personally. So if you trade the dollar yen, you might be frustrated because the market can also get sideways for some time. So not the best in terms of trading for this time around. For the euro, as we have explained, from here we expected the market to react higher, and ideally the target area should be the 107, 108. The way the market has been trading right here, it is so far corrective, of course, and we can expect the market after a consolidation to give us another push to the upside to reach this 108 area, and this will be our bias for the euro for the coming week or two. For the pound, same story. We expect from here the market to react higher to the 128 area. The market has hit exactly the 128 100, and it has gave us a reaction yesterday during the NFP. So from here we can expect the market to potentially give us some more consolidation before the next push to the upside. We can see this one around the 129 area ideally. If not, the market then can also get more choppy and sideways in the short term. But for us, we were interested in this move which we have seen, and now we are not looking for anything new in the pound. So of course, for more detailed analysis, longer term and shorter term, feel free to become a member with the link in the description. And we can also share with you, as with the other members, our detailed analysis like we usually do, so you are more prepared ahead of time. Now for gold, as we have explained last week, we expected the market to give us some consolidation here before the expected move to the upside. It has spent the entire week doing so. So we can still see from this area that gold should be giving us at least one more push to the upside before anything else takes place. And this will be still our bias for gold to the upside towards the 2,750 or even new all-time highs. We will see about that. But for the time being, for us, what we are seeing in the market is just an accumulation stage for another push to the upside against the lows from 14th of November in gold. So this will be our bias. We are not looking for any sells in gold at the moment, and ideally is not, let's say, a very suitable instrument for the best trading setups, but this is the expectation that we can expect for the next week ahead. So oil continues to extend to the downside as we expected anyway. We have explained about this choppy price action that we have been seeing over the last month or so, and still the bias remains to the downside, and we might expect this one to break the area of 66-65 and go towards the 60s. This should be what we should be seeing in the market ahead, but of course not a good setup for selling at these areas. We have explained many times that the best bounces to sell were these ones here from July for those who like to sell oil, and in April. Anything else at this point, it's a very poor risk to reward. We don't like the market when it's doing that. So in our view, still more downside in oil should be happening next. The last low this year was on the 10th of September. We are expecting this one to be broken soon. And let's see where we go from there. Of course, for long-term analysis in oil, our members are always aware what we are expecting in the levels. So if you want to know, feel free to join us so you are prepared ahead. If you are trading oil, and by being prepared, you would be expecting, if you see certain conditions, you will know what to more or less expect and how to position yourself with the best risk to reward ratio, and of course with the higher probability chances for the move to go in your favor. For natural gas, very simple. We have got a nice pullback here, which in our view, this is a buying opportunity for the run towards the $4 area. Anyhow, so we are expecting from here the price to give us a big momentum to the upside and break the highs from the 22nd of November, the 3.55. We are expecting natural gas to go higher into this bigger target area towards the $4 region. And we can expect to see that very soon during this month. All we have to do is pick up momentum next week and break eventually the highs from 22nd of November. And that should be the area that we should expect to see natural gas very, very soon. The indices, the SPX S&P 500 cash index, we have been more or less higher to sideways during the last week. As you can see, we expected more upside anyway. We are soon approaching a bigger weekly target area that we expected from the beginning of the year. So from here, we should be expecting the market to continue higher. Eventually, it might give us a pullback, but still we are expecting more upside in the S&P 500. This is not a tradable instrument for the time being. If we see sometime soon or later some sort of a pullback, this might become the next buying opportunity. But until then, this is a market for no trading and just watching it unfold. Of course, if you are a long-term holder of this index, you can keep holding. We can see more upside in general. So this is the bias that we have for the S&P 500 for the time being. For Bitcoin, we expected the market to give us some sort of a choppiness and consolidation around the 90K area. This is what the market has been doing. It wasn't able to give us a double correction lower, and instead it made one more high. Of course, we expected the market to break the 100K area, but from here we might expect to see some consolidation before the next move to the upside. So if we see that, the next area we can expect support from Bitcoin is the 89-85K area, which from here we should see the next push up above the 100, a clean push up higher. So this is our bias for Bitcoin overall. So of course, don't forget guys, our webinar that we are going to host only for our members on the 20th of this month. This is the banner right here. So don't forget our end of the year offer. This is for you to change your trading journey forever. So if you want to join us, the link is in the description. You will also be able to take advantage of the end of the year offer if you want. If you don't want, of course, you can join with the monthly. Otherwise, you will also benefit this month for our 2025 yearly market forecast. We are going to prepare our members how 2025 might be unfolding and how we are going to be planning ahead and taking the next year's opportunities like we did this year. We had an amazing year. Next year, we are expecting to continue in a similar path. But of course, every year in the market is different, and the only way that you can make it work is by being part of a professional service that is looking to support you and has experience with many different market conditions. And we know that things can get more difficult in certain years, and we know how to manage those years accordingly because we only take clear setups and we are not rushing to get into trades without any valid reasoning or data. So you have definitely things to benefit from us, and also we will see you in the next video that we are planning to reveal many more things overall about trading, about the industry overall. So many things are coming ahead for you guys to get value from. So thank you so much for watching this video. Hopefully you found this helpful, and of course don't forget to subscribe. Always leave us a like. This again will help us to reach much bigger audience, so we can help out as many people as we can, of course, and provide the most value where we can. So see you in the next video and enjoy the rest of your weekend. Take care.